The following is a presentation of TFNN.
Sylvester Stallone knew his whole life what he wanted to do. For him, it was a chance to inspire others. Life wasn't easy. At birth, he was pulled out by forceps. It's why he looks and speaks the way he does. 1,500 agents said, "No, you're not an actor." His first 3 scenes led to nothing, but he never gave up. Sly sold his first script, Paradise Alley, for $100. That money didn't last long. The last thing he had left was his dog. He got $25. That was rock bottom. He cried, and soon after, watched a fight between Muhammad Ali and Chuck Wepner. Wepner went 15 rounds but was pounded to a pulp. It inspired Sly, and he wrote for 20 hours straight the entire Rocky movie. Tried to sell it, but nobody wanted it. Too predictable, too sappy. Sly saved those comments and read them to himself the night he won the Oscar. Sly never gave up. One day, 2 guys offered to buy the script for $125,000. Sly said with one condition, "I'm Rocky." No way. We need a star like Ryan O'Neal to play Rocky. Can you imagine? The same guys called him back and offered him $250,000 not to star in his own movie. Sly said no. They countered with $325,000. Sly said no. They compromised. $35,000, points in the movie, and Sly would play Rocky. Rocky has grossed over $225 million and the entire franchise over $1 billion. What's your Rocky moment, folks? What's your vision? Your unstoppable success? You were born to be a money master. The time is now to take massive action.
Let's go over to Don in Odessa, Florida. Don, thanks for calling. Thanks for holding.
Hey, Steve. Thank you.
You bet. How you doing today?
I'm doing okay. I'm a subscriber to your service, and I just want to let you know that I sure do appreciate what you've done for me.
Wow. Thank you very, very much.
The Trader's Edge with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the January 2nd, that's right, January 22nd already, terrific Tuesday edition of the Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely love being here with you folks. I treasure your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Hopefully everybody had a great holiday weekend. If you were off and you had an extra day, all of us around here did, and it sure felt good. So we've got some extra energy that we're going to have to burn off today. And, of course, we'd love to burn it off with you. You can do it by giving us a call here at 877-927-6648. Always love to hear from you. Let's go take a look at one of our tools out there. This is a tool that I call a happy person is not a person in a certain set of circumstances, but rather a person with a certain set of attitudes. A happy person is not a happy person with a certain set of circumstances, but rather a person with a certain set of attitudes. Now, what do you see? Do you see the donut hole, or do you see the donut? Do you see the glass is half empty or half full? The answer to those questions can help you to identify whether you're an optimist or a pessimist out there. Take 2 people who make the same amount of money each year. One may complain while the other may make hay out there. One looks forward to coming to work and the other dreads it. One is happy to be heading home feeling that he or she has put in a good day and they've accomplished so much, and the other, well, let's just say they're not so happy. Everything in life, folks, can bring you joy. It's the attitude that you carry that is going to determine your happiness. In fact, a happy attitude can help you to create your life's circumstances. It's often said that the happiest people are those who are too busy to notice whether or not they're actually happy out there. Accept life unconditionally, as most people ask for happiness based on conditions. Remember, a happy person, folks, is not a person with a certain set of circumstances, but rather a person with a certain set of attitudes. Let's go take a look and let's get an attitude check of the markets out here. Even though the markets were closed yesterday in the U.S., futures this morning basically flat. The Dow would open up maybe about 17 points lower. The S&P should open about a couple points lower right now at 911. And the NASDAQ futures look like maybe off about a couple points. Russell 2000 down a point or so. Again, our call number 877-927-6648. If you are watching us on Tiger TV, thanks so much for doing that. If you'd like to watch us on Tiger TV, just go to the homepage at tfnn.com. Over on the right-hand side, you'll see some smartphones, some smart tablets. Just click on that. This show will stream live to your smartphone. If you don't have a smartphone or you can't pick up the live stream, you can always listen to us on tfnn.mobi. Right now, we got King Dollar back 13 ticks, trading out at 79.98. Gold is up about $4, 16.90. Looks like gold wants to travel higher. Light sweet crude up 24 cents, out at 95.80. Looks like $97 or so is the target for light sweet crude. High grade copper up a penny right now, out at 368. Across the globe here, the DAX right now off 50 points, 48.21 off of its session lows. The FTSE is basically flat, down 16 pennies. The Nikkei off 37 points. The Hang Seng down 13, and the Hang Seng was up 68, and the Shanghai was down 13 points last night, out at 24.23. So let's start off taking a look at the ES Mini 30-minute chart. And then we're going to switch over to the Dow stocks here before the market opens that released earnings this morning. We had Verizon out with earnings. They're trading up about 51 cents right now. You had Johnson & Johnson. They missed numbers, down 48 cents. You had DuPont. They're trading up about 1%, up 51 cents. Travelers being the big winner this morning, although they certainly their profits plunged because of Hurricane Sandy, or the superstorm Sandy, I guess is really what it's referred to as, but not as bad as it could have been. They're up about 3.5% this morning, trading out at, up about 3.5%, up $2.70. But if we take a look at the ES Mini out here, let's take a look at how price has moved in, up and down. The EKG, we take a look at that relative strength indicator down there at the bottom. In fact, on Friday's session here, if you took a look at the session as was moving into the 12 o'clock time frame, you saw the ES Mini get down to a low of 1470.50. As it did that, got down right to the 30.16 level of that relative strength. If you are going to buy, if you want to buy lows and sell highs, and make sure that you add this indicator to your chart, but also make sure that you understand candlestick charting, because you want to draft the bulls when you're buying, and you want to draft the bears when you're selling out there. If we do take a look at the ES Mini on the 30-minute chart, you can see price moving down, completed A to B equals CD. We'll draw some of those patterns in here. In fact, one of the tools that you really want to be paying attention to is contractions, retracements, if you will, between swing points. And a swing point is nothing more than what we'll call a major intersection when you're taking a look at a chart. You can take a look at the major intersections where you see the most significant change in direction, the change in polarity of price out there. And then what you want to do is you want to be able to measure retracements and expansions of swing points. And especially when you see a couple numbers come together, or when you go ahead and you line that up with your relative strength indicator, with your candlesticks out there, those are the tools. Those are all the tools that you need to go ahead and pull the trade, with the exception of making sure that you have the right money management structure in place. I've got a tool on the software package, which is Ensign Windows. That is the software package that I use out here. And if we do take a look at it, I'm going to go ahead and turn on a tool that just simply immediately allows you to identify retracement and expansion levels. And it's a beautiful tool out here. If we take a look at where we're currently at, and then we'll go back here, we'll take a look at the low that came in this morning at 4:30 a.m. If you were one that wanted to buy the ES Mini, you should have been up early this morning. If you take a look at as the relative strength was moving down and created a little doji candle there at 4:30, followed up by a bullish engulfing during that. And we're looking at a 30-minute chart out here at that 5 o'clock session. You can see coming off of the RSI level down at the lows. You can see also doing a 0.382 retracement of the swing point off of the 12 midnight time frame on January 17th. You see the swing point right here. This measurement here says 70%. Well, you know that we use 0.618 and 0.786, so slightly, really in between that level out there close enough for my type of government work out here. What we can also see, take a look at as the ES Mini here has been traveling up since the highs that were put in last evening at 11 o'clock. The high out there being 1482. Now, what the ES Mini was doing was making small, slight expansions to the upside. We can see that since 11 o'clock last night, that has not been the case. In fact, what it's been doing, it's been making retracements. The first retracement was, there we go, back to that point, 707. There are certain numbers, if you had this tool on your screen, that will show certain harmonic patterns, and you just need to be familiar with those. Then you're looking for candle signals to go ahead and give you the indication. If you take a look at the ES Mini as it moved down, made an expansion to the downside. We know that it was stopped here as price moved into what? Into that oversold territory. We also know that it was coming in off that 0.382 retracement. So we can see all those things coming together, and now what we see is on the move up here, made it to the 0.786 as well as a 0.618 retracement. That was coming in at 6 o'clock this morning. So it gave you the indication, the signals. You had Fibonacci numbers coming together. Of course, it did not get into overbought condition out here. This morning's moved down into the 8 o'clock time frame before we came on the air, making a 0.786 retracement. We're making a real tight cone out here, and the relative strength indicator not giving you any indication as to whether the move is going to go higher or lower. That's not where you're in the middle of a move, in the middle of a stroke. That's not when you want to either be buying or selling. What you want to do is you want to wait until you've got the market down here and the candle signals and perhaps retracements or A to B equals CD patterns. You say, well, what's an A to B equals CD pattern? Well, let's just take a look at this one here that pops out at me. If we take a look at this shooting star candle coming in at 11 o'clock last night, your A point out here on the ES Mini is 1484.25. We take a look at the natural harmonic, the B point coming in at the low at midnight, down at the 1479.50 level, makes a little move up into the 1 o'clock time frame, up to the 1482.75. What you can see here as the 1-to-1 A to B equals CD was being made. You had a wide-ranging bar. Got a wide-ranging bar. What's that tell you? It tells you you're likely going to see lower price. What does the ES Mini actually do? Makes a 1 to 1.618. A to B equals CD. Does it with that doji. Does it when it gets down to the low of that RSI. And then if we turn on that simple indicator here that measures retracements between swing points, also at a 0.382 retracement. Gave you everything you needed to know if you were long to know that, okay, you're going to start to see a retracement here. And if you were short, to also know that you were going to see a bounce, because the market is a living, breathing organism of yous and me's. Even though I know those aren't words out there, that's really what it is. And you want to wait to enter a trade when you've got all of the marbles on your side, the best marbles that you possibly can get. You learn to use these indicators out here. If some of this sounds like it's foreign material to you, then let me help you communicate the message of the markets out there. The easy way to do that is sign up for my subscription service for 30 days, unconditional money-back guarantee. The amount of education contained inside the newsletter, contained inside the 32 hours worth of education that comes with it, and as well as just simple access to me. I will teach you how to identify these things so that you can trade. And this will help you even if you don't trade the futures. You want to understand what's going on inside the futures contracts if you trade intraday before you start trading your triples and doubles out there in the marketplace. When we do come back, we're going to go take a look at some of the stocks here. As I said, Verizon, Johnson & Johnson, DuPont, Travelers. And we'll come back. I believe we've got a caller on the line. We'll go take a look at the NASDAQ futures as well. It is great to be back with you on this terrific Tuesday. A great lineup as always on Tuesdays. 877-927-6648. I'll be right back.
Well, it's always better when we're together. Yeah, it's always better when we're together.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and will be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Let's go to our first caller. Let's go out to Nashua, New Hampshire, to Lou. Lou, thanks for calling. Thanks for holding. How are you this morning?
Yes, how are you this morning?
Doing great. Doing great. You wanted to take a look at the NASDAQ futures. Tell us what you're doing, what time frame you're looking at, and how we can help you.
Well, I'm not doing anything yet. I just was thinking of going long.
Okay. So if we take a look at the NASDAQ futures, what I've got here is I'm going to switch between a couple of charts for you. In fact, folks, if you are just listening in, what you'll want to do is catch the archive of this show, because I'm going to show you something here that very few folks actually know about, and now I do because I've gone back and studied all the chart patterns. One of the things that I'm taking a look at, Lou, here on the 30-minute chart, and these patterns here, they work on all time frames. And I'm looking at this pattern here that began at 4 o'clock this morning. At 4 o'clock this morning, folks, you can see a wide-ranging bar on this 30-minute chart. You had the NASDAQ futures trade as high as 27.38, and the low was 27.29. Then what it did is it moved right into the oversold condition. That was really between the 4 and 4:30 time frame. Made this little small-bodied candle right here within inside the entire candle of the 4 o'clock session. That's not a bullish move, other than just simply moving down into that oversold territory. You did get a little bullish engulfing, though, Lou, at that 5 a.m. time frame, coming off of an oversold territory. That was really your trigger to go ahead if you wanted to take a long position back then at 5 a.m. But then what happened in that 5:30 session, you've got this wide-ranging bar up. Now, what this really sets up, you've got this little bullish engulfing candle right here at 5 o'clock. But this 4-candle pattern out here, this is what I call the hurricane. It was we've got a listener out there that actually helped me name it. I think he's a University of Miami graduate out there, and it looks like the University of Miami logo, at least the way that we looked at it. And I've been struggling to come up with a name for it. A 3-candle pattern that looks like this is what's called a morning star pattern. And this 4-candle pattern, I can't tell you the reason why, Lou, but it is one of the most powerful candle patterns that I have seen out there. And let me give you an idea of what I'm really referring to. If we go back and actually take a look at the larger term, the daily charts out here, if you take a look at this candle pattern that occurred on November 14th, November 15th, 16th, 19th, this 4-candle pattern out here, really the same thing. We're just looking at different time frame charts. The market moving down into the oversold condition. You move down with a relatively wide-ranging bar in that session on November 14th. Little doji type candle again on the 15th, a bullish engulfing on the 16th, and wide-ranging bar to the upside. This little 4-candle pattern out there, really strong. That's at the November 16th lows. Look what has happened. You've gone from being oversold now into the overbought condition. Because the markets are all up towards the overbought territory, I hesitate to really tell you to go long here. On an intraday chart, it's a little bit different story, but I want to show you the candle pattern. That way you can look for it yourself. If you go back and you take a look at the same lows here, we're just looking at the S&P 500, if I didn't make that clear, as I switched over to the index charts. You can see the same candle pattern in June 1st, June 4th, June 5th, June 6th out there. Exact same candle pattern coming from an area of the market being oversold. And that's where, folks, what I want you to do is I wanted you to be able to take the power of these candles, the power of these tools, and that way you want to be able to buy fear out there. Now I'm going to go ahead and take the S&P back further. These candle patterns show up at other important lows. I'm going to go show you, what is the most important low perhaps out here, and that is the one coming into March of 09. If we come all the way back to March of 09, a wide-ranging bar coming down on March 5th, a little doji on March 6th. You didn't get a bullish engulfing on the 9th, but you did get that 4-candle pattern where you had that wide-ranging bar moving up on March 10th. So only on an intraday chart, Lou, does on the NASDAQ futures say, okay, it's, you could take a long position, but your real time to have taken it, the boat was right here at 5 a.m. out there. And right now, as we take a look at it, what I wish is that, that's that the market we're back towards that relative strength indicator down towards the lows here. Right now, you're just midstream. And I don't like doing any, I would rather be patient and wait as opposed to, and wait for the ideal type trade because they set up all the time. You had a similar trade on the NASDAQ futures back at about the 12 noon time frame on Friday. So just be a good fisherman and wait for the market to come to you, either pull back to you or move up into you to sell short. All righty?
Got it.
You bet. Thanks for calling, Lou. Have a great day. We missed the opportunity, folks, to go take a look at some of these Dow stocks out here. When we come back, we'll go take a look at Verizon, though, when it opens. It's been all over the board. Earlier this morning, it was trading down. It's up 53 cents right now. We're going to take a look at a couple patterns out here. It's got one of Stevie's favorite candles, the hammer candle, coming into a 1.272 extension. An A to B equals CD down to 1 to 1.618. It had everything back at that hammer. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races with our sledgehammer. We've got the Dow off 2 points, S&P off $1, Composite up 1, small caps are really not out of the gate just yet. Microsoft up 19 ticks, Intel back 5, Google down $1.28, Cisco off 7 pennies, Apple up $6 and change right now, leading the charge to the upside. Right behind them, you've got Travelers up $3 and change, up 4%. Westco International WCC up $2.50 right now. That's up 3.5%. C-Cube Container Box. We'll go take a look at Box. They're up 13% this morning. OM Group, OMG. How did they get that for their ticker symbol? OMG, up $2 and change. That's up $8. 3D Systems, triple D out there. They are up 2%. You've got to the downside, you've got EAT, Brinker International. EAT is their ticker symbol, off 6%, down $2 and change. Impacts Laboratories off $2, 9.5%. Sears Holdings down 3%. Google's going to be out with earnings after the bell today, down $2 and change right now. Packaging Corp, PKG, off 4%, down $1.35. F5 Networks off $1.57. Our call in number 877-927-6648. Let's start off by taking a look at Travelers out here. Why? Because it did have Steve's hammer candle out here, and really a great looking set of patterns. If we take a look at it, if you're watching us on Tiger TV, remember, you can always catch the archive of this show on Channel 9. This has really got everything that we teach out here. It's got all of the Fibonacci expansion and contractions and candles and A to B equals CD. In fact, let's go ahead and put relative strength on this chart out here. I noticed that is missing out here, as well as the market moving down into where? In that oversold territory. And when we take a look at this is why I'm suggesting, folks, if you're not long, do not get in the market and try to go long now, because what you've got is you've got the market moving towards the top of that overbought condition. Yeah, if this is a bull market, things can stay in overbought territory for a little bit longer than you might like, but it's not the time for you to go ahead and take long positions out there. Wait for markets to pull back or look for stocks that are moving down into the oversold territory. Look for patterns that are completing out there, retracement patterns, A to B equals CD, expansion patterns. Look for reversal candles that are out there. If we take a look at Verizon here, let's take a look at the A to B equals CD pattern. You would start off here with the swing point high on October 5th out at 47.32. That's your A point. Your B point, as it makes this little doji coming into October 15th, moves down to a low of 43.75. Looks like probably a 0.618 retracement as it moves up for 4 trading sessions into October 18th, up to 46.42. Now you've got the market has done 75% of the work for you. It's done the A to B. And we know the C to D is going to be a 1-to-1 60% of the time. The other 40%, it is going to do something more. 1.272, 1.618, can do a 2, can do a 2.618, but all you have to do is go ahead and line these indicators up. Well, what does Verizon do? A 1 to 1.618, A to B equals CD. That's the first time that you see the bull step in here. That's with this Stevie hammer candle out here. It's not a type 1 hammer candle. It would say it's really my type 3 hammer candle out there, but still a hammer nonetheless, coming at the bottom, coming at the completion of a 1 to 1.618, A to B equals CD. How about just simply measuring those major intersections, the change in polarity, the change in price coming off of the August 23rd low, 42.18, all the way up to the A point, the high put in on October 5th. If you took those two dollar amounts, you subtract them to get the difference, multiply times 1.272 and subtract that from the high of October 5th. That would take you all the way down to the bottom of that hammer candle. My guess is if we go do a little retracement here, we're going to see another Fibonacci number. Let's go take a look at off of this major intersection where you see the market in Verizon down at the oversold territory out here. Makes a little bull sash candle that following trading session on April the 11th. But if you take a look at April 10th, from that low all the way up to the high, what you're going to see is the hammer candle also came in where? Suite 618, the exact suite that you would come join us here if you were going to visit downtown Clearwater out here. So now you've got a Gartley buy pattern with a 1.272 expansion, an A to B equals CD, down a hammer candle, and down at the oversold territory of the RSI. Was that a beautiful trade setup or what? It most certainly was. We take a look at what it did and what it's supposed to do. It's supposed to make a 0.618 retracement off of the high to the low out here, and that is exactly what Verizon did. Verizon gets up to that 0.618 retracement level. It does it on December the 12th, 12. Great rock and roll concert out there for sure. What does it do the next day? Gives you a bearish engulfing candle. If you were low down at that hammer, all that meant is your expectation should be a pullback or a retracement. And if you don't like that, tighten your stop or just go ahead and take your profits off the table. Absolutely has everything. Go study the Verizon chart out here. What did Verizon do so far this morning? Now, you can also see is as it made its retracement, and it made that retracement coming back on January 16th, gets back to where? Gets back towards that oversold territory, makes this little bull sash candle here on January 17th. Very possible that what Travelers is trying to do now is what? Make an A to B equals C to up. And what do we also know about that hammer candle out there that came in here on November 16th on Verizon? If you're long Verizon and you get a close below that hammer candle, if you are long, you are wrong. It's a great poetic justice out there. This case here right now, what you're seeing Verizon do, when I take a look at this chart, what is confusing to me, what should be confusing to you as well, is what happened right here. What happened on these two trading sessions, June 22nd and June 25th? Why do I say that? Because you did volume of 82 million and 55 million without wide price spread out there. And I don't know if we've got a big seller or a big buyer out there. As price travels below that area, I say you have to be cautious. And when I say that area, I'm referring to 43.39, the low of June 25th. The high is on June 22nd out at 43.95. If you're long Verizon, you want to see it get up and over that 43.95 level and stay up over it and move up over that area and come into January 7th with more than 20 million shares. Let's go to Eric in Knoxville, Tennessee. Eric, thanks for calling. Thanks for holding. How are you today?
I'm doing great. How are you?
I am doing absolutely fabulous. Thanks for asking.
I was looking at Harmony Gold.
Oh, okay. Tell us what you're doing, what you're looking at, and how we can help you.
All right. Well, I own it. I bought it here right at $7.50.
Okay.
I'm looking at support here at, right at that $7.50, $7.45 area.
Right.
And I'm a short-term swing trader.
Okay.
And just, I'm playing a bounce, basically, out of here.
Sure.
But I just wondered what you thought of it.
So if we take a look at Harmony, I'm taking a look at the daily chart out here. And so, you've got your line is drawn in the sand here pretty well. I think you've identified the trade very well. So congratulations to you there. That low of January 16th is really going to be key for you, that 746. So, you had the relative strength indicator move on down towards the lows, towards that 30 range. Didn't get all the way down there, but still close enough, down towards the area where you'd want to go ahead and take a stab at it. On the 16th of November, you had a little doji candle. Now, you got Harmony Gold, folks, moving off of a high, most recent high on January 2nd, up in the $9 range. I presume that really, Eric, that's probably where you're trying to target, somewhere between the $8.80 to $9 range. That would be that swing point out there, and that's where you also see Harmony Gold moving up into that overbought condition out here. You had two dojis in a row on January 17th and the 16th. And the good news about that, as it's moving down to that area, it says it's losing energy. It's kind of maybe lost its way. So Friday's session out there, gives you a little bit of assurance that it wants to make a move topside, where you're going to run into some real turbulence if this does move topside. Is going to be this session from December 21st. Because you've got 8 million shares out there, and the price spread, it wasn't wide price spread. So when you don't have wide price spread, it's not as much conviction. You want to see accelerated volume and wide price spread. What I mean by that is a wider candle, a bar that just really sticks out at you. So those folks that took a position that were nibbling back around the $8.15 level, they might like to just get their money back as price moves up there. So you'll see if price starts to stall in the $8.15 area, just expect it. Doesn't mean you should get out of the trade, but just something that you should expect, and then you can make your call from there. So that's on the daily chart. Do not let it close below 746 out there, though. I mean, I would because you don't really have the most bullish of candles or anything from a price standpoint. Now, what I'm going to do here is let's go take a look at the monthly chart, Eric, and see what we're looking at on the monthly chart. And the monthly chart, your real concern on that monthly chart happens to be the month of November 30th, 2008. And the high there is 870. What you really want to see is this thing get above 870 monthly to have any real meaning. Price is still trading with inside that level, and as long as it trades inside there, it always opens itself up to testing the bottom of that level, which would be $5.47. So you had a nice bullish engulfing candle for the month of December. That has just simply been totally erased by January's move so far. So on a monthly chart, you don't have a real bullish case here, other than if you're taking a stab like you are to make sure you don't let this close below that 747, 746, 740, let's say 746 area. And that's what the monthly chart. And what the equity did was it pulled back to that 0.786 level, which is $7.67. And so that should be, good support, which is the reason why you don't want to see it close lower. Because if it does, then your next buy on this is likely $5.47. That's what the monthly chart shows. Let's go take a look at and what I love the equity, quite frankly. So trying to go ahead, and what I like about it is if you take a look at the monthly chart, as long as we're here, you've got a nice high volume high, March 31st, 2011 out there, 105 million shares, and there was not volume off of the highs out there. And so price should be able to get back, and that's anywhere between a range of 1161 to 1536. So I like it on the monthly. I'm sure I like it on the weekly, which I do as well. But that's after we start to see some real bullish moves here. And on the weekly chart, we don't see that either. So, you're nibbling out there for sure. Hopefully it's a small position, and just take a small loss if it does close below that 746 area.
Yeah, that sounds about where I was thinking of it. I just was looking for a little confirmation, I guess, and making sure you looked at it the way I did.
Yeah, it's unfortunately the weekly and the monthly, they don't really give us any good indication for a reason to be long. You're bottom fishing, and bottom fishing is cool. You just make sure you use a tight stop. Make sure you got a wide enough stop in there, and and take small losses and be ready to come back and take a look at it, because it does have some pretty good long-term setups. So we just like to see a sign of strength now off the bottom on it, and we haven't seen that.
Gotcha.
Okay.
All right. Terrific.
You bet. Thanks, Eric, for calling, and have a great day.
Thank you. You too.
Okay. Let's go take a look. So we got Google's going to be out with earnings here, and then we'll go take a look at those other Dow charts out here. But if we take a look at, we're going to have Google out with earnings after the bell, so that's going to really help to identify what is going on inside the NASDAQ. Of course, we have Apple, I believe, is also out with earnings tomorrow. So we've got a few things that will be moving these markets. If we take a look at the daily chart on Google, it is pulling back. Let's go try to see where it is pulling back into. Of course, we know that Google here was struggling as it was making its move higher coming into the downdraft. Last earnings release. Of course, I believe last time they had a little snafu. I think earnings were released a little bit early on October 18th. I think it was supposed to be released after the bell. In fact, I'm certain of it. I think the earnings hit the wires, I don't recall the exact time, maybe between 3:30 and 3:45 or something like that. But anyways, the big downdrafts in Google, meaning big supply lines anywhere between the 759 to the 672 price range from October the 19th. What Google's done is come back. You know how the markets here have, and Google's, certainly a leader out here in the marketplace. And so it's always important to gather information from the leaders to see what they're doing. Well, we know our markets here, if we take a look at just the indexes themselves, you had that large gap up on January 2nd. If you take a look at Google, that's where my little crosshair is right now. It too had a gap up. Moved up to the low of that day was 716.55 all the way up to 727, 2.5 million shares. That's after having a decent day with 2 million shares on December 31st. The low there, 696. Google right now trading at 699. So Google's come all the way back into that breakout area, and it is doing it with volume, I believe. If we take a look at the December 31st candle, 1.9 million shares. Friday session coming back with 3.2 million shares. Coming into that swing point with too much volume out here. And, this should find decent support. We'll see. Should find decent support down at the 672 level. If we take a look at just simple retracements off of the November 16th low, which was on Google, was at the 636 mark, all the way up to the high put in on January 10th out at $745. You can also see what Google's done. It's trading below that 0.382 level. So the next normal level for Google to move down to would be 677. That would be the 0.618. That would also get you down towards these high volume bars out here from October 18th and October 19th. Google not oversold just yet. You can see as it did get into that overbought territory, price started to move back. Use these tools, folks. They do work. They allow you to enter into trades, take small losses. Again, in a bull market, get into overbought territory. It can continue to rise for a while. But I promise you, it'll pull back from being in an overbought condition 100% of the time. 877-927-6648. We'll be right back.
Yeah, it's always better when we're together.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Last evening, about 11 o'clock or so, I believe, Eastern Standard Time, Bank of Japan out saying that they are going to go ahead and do unlimited asset purchases beginning in 2014. 2014. You know, we've seen a huge rise in both the Nikkei and the yen, as the yen has gotten weaker as we take a look at the U.S. dollar, Japanese yen currency chart. Right now, we've got on the screen is the actual Nikkei out there. Now, the board governor, I believe his 5-year term is up in April. I don't know if it's the beginning of April, end of April out there. So, you know, there may be some changes out there. As far as the market, now the Nikkei here, as we take a look at the Nikkei has been giving us a couple of reversal signals here when it's coming from really the extreme overbought territory. First made a little island reversal candle. It completed that session on January 16th. They had a little bit of follow through on the 17th, and then a big gap up on the 18th here, really coming back and getting all of those folks off of the island that was created on January 15th. And then on Friday's session, you had a key reversal day. Now, key reversal day, folks, needs three things. Intraday, you need to exceed the high and low of the prior session. Well, clearly we did that here. I'll go ahead and blow this up on TigerTV, or if you're watching in the den, again, if you're just listening on the radio, your mobile device, you can catch the archive of this show on channel 9 out here, so you can see here that the market did that. It exceeded both the high and the low number. That's the first thing that you've got to do. Number two, you need to be coming from a extended condition. Well, we know here that this is absolutely an extended condition. If we take a look at retracements off of the most recent swing point of March 27, 2012, down to the low that was put in another island reversal back around the June 4th time frame, you can see a 1.272 expansion, an extension, being an overbought territory. So that certainly qualifies as an extension. And then number three, you need to close in the reversing direction. And that is, in fact, what happened on Friday. So now the Nikkei has had two blaringly loud reversal patterns up at the top here at that 10,052. Actually got up to a 10,949 on Friday's session out here. Today's session of the Nikkei going to be a little bit of a spinning top or what have you. So no real candle formation out there other than just from a bearish engulfing from Friday, a little bit of follow through today. You can see that what the Nikkei is going to do, the Nikkei is going to go ahead and work off this overbought condition. The question is, what is going to be the level of pullback? You want to be all over the Nikkei when it gets down into the oversold territory, and I suspect that is what we will see take place out here. It may take weeks. Not sure what the time frame is, but that's something that you want to go ahead and have on your list. If we go over and take a look at the currency pair, let's take a look at the U.S. dollar, Japanese yen on Friday. So this is obviously before the Bank of Japan is going to go ahead and give you its news, but the market here on Friday formed a bearish engulfing candle. Also, with the U.S. dollar, Japanese yen being in overbought territory, being in extended condition out here, and it looks like you also had a key reversal day. Let's see. The high on January 18th, 90.197. The high from Friday, 90.237. How about that? We also had a key reversal day. I didn't pick up on that until just now. So we had a key reversal day in an extended condition. Most certainly when we take a look at either A to B equals CD patterns, expansions of swing points, being in the overbought territory, as well as making that bearish engulfing and some follow through today. Folks, thanks so much for being here. The Dow is up 12 points right now. Otherwise, S&P is flat. Composites down 2. Stay tuned for the Money Masters show. And then as we do on every Tuesday, we'll go up to Basil Chapman from 11 to 12. Victor Jones, 12 to 1. Daryl Martin, 1 to 2. David White, 2 to 3. Ken Shreve, 3 to 4. And none other than the Tom O'Brien show from 4 to 6. Have a great Tuesday, folks, if you're starting your day. Take care.
Yeah, it's always better when we're together.
The
me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.